everyone and welcome back to my channel. I hope you guys are doing amazing today. If you're new here, then hi, I'm Hazel. I make lots and lots of savings videos, finance videos, and just videos overall to make you a better you, to give you a little bit of an idea as to whatever the title of the video is about, and to help you improve your financial situation. So today's video is going to be all about the Help to Buy equity loan, and this is something I feel that I can talk about quite a lot because it's actually something I did myself. This is how I purchased my first property, so I do know a little bit about it, and I've also done my research as well online just to gather my facts and figures to make sure everything up here is correct before doing a video on it for you. So I really hope you guys find this video helpful. If it's something that you're considering doing, hopefully this will help you to make your mind up and to see if it's right for you or not. So I've got my notes here because there's a lot of notes to go through, and let's get into the video. Okay, so first off, what exactly is the Help to Buy equity loan? Well, it's a scheme run by the government which is basically designed to help people get onto the property ladder and to help you purchase your first home or even a second home. So that's right, it's not just for first time buyers, but we'll get into that a little bit later on in the video. So the Help to Buy equity loan, it typically works on the basis that you put in a 5% deposit, the government will give you up to a 20% deposit loan, and then you have a 75% loan to value via a mortgage. So the 20% the government give you is the absolute maximum that they're going to lend to you. You can be lent a lower sum. The same goes for your deposit. The minimum is 5%, but you can put in more than that. And the Help to Buy equity loan is available on properties up to the value of 600,000. If you live in London, the actual 20% is then increased to 40% as well. And I've read that that applies to Greater London. So if you do live in London, get that checked out before applying, just so you're aware of what you're eligible for. So let's do a little example. So say you're buying a property for 200 grand, which is around the figure that I paid for my 1-bedroom apartment. Then you could put down a £10,000 deposit, which is 5% of the property value. The government would then loan you £40,000, and then you'll have a mortgage of £150,000. And then next I'm going to go through loads of other facts and figures about the Help to Buy equity loan, but I've fit everything into categories of pros or cons so that I can talk to you about what the factor is and how I think this may impact you. So first off, I'm going to go through the pros, obviously, because let's start on a positive note. So the first pro is obviously that you can get onto the property ladder quickly, and some people feel that it's a way of getting onto the property ladder when you don't truly deserve to be on the property ladder, because if you can't afford to buy the full property outright with your own deposit without the government help, why should you be able to buy a property? And ultimately it would be great for us all if we were in a financial position where we could do it without any support from the government. But my answer to that is it's extremely difficult to get onto the property ladder these days. To earn enough money, to borrow enough to get a property, it's really difficult, because you'd be needing to earn a hell of a lot of money to get on the property ladder without any of the Help to Buy equity schemes, depending on where you live. If you live in Essex, which is where I live, or London, you guys can vouch for me that it's very expensive. So it's highly unlikely, especially if you're buying a loan, you'll be able to buy a property without one of these schemes unless you save a substantial sum, which then moves me on to the factor of saving. Some people would argue, why don't you wait another however many years and save the money the government were going to loan to you? And yep, you could of course do that. So in my situation, I could have waited to save another £40,000. But by doing so, one, it's taking you a really long time to save the extra money, and in the process, property values are growing and increasing. So you have this never-ending gap between what you're saving and what the property market is growing by, because let's say you save a load of money and you can save the 40 grand in, say, a 4-year period. In that 4-year period, properties may have grown by 40 grand on the property you were looking at. So you haven't really saved anything, if you see what I mean, because you're paying more money for the property, which means you then need to borrow more money and all them other factors. So the main key for me is that it gets you on the property ladder quickly and it secures you a property value at the current market rates of properties. And the second pro is of course that you haven't got to save loads and loads of money for a deposit. So people that are in a position that they're perhaps struggling to save a deposit, perhaps you're renting and you really can't get together 50 grand for a deposit, for example, it means that you can save a much smaller amount and get out of that rented accommodation and start paying off your own mortgage, which I think is a great option for someone in that position, because some people do find it very difficult to save, and I was in a fortunate position where I could save quite quickly, and I still am continuing to save quickly, which we'll touch upon later on in the video, because I do plan on repaying my government loan. But some people aren't in a position where they can save quickly, so that is a definite pro. Gets you a house quickly, quickly, gets you out of your current situation. And another pro is that you haven't necessarily got to worry about repaying the government loan. So a lot of people out there think, oh my god, I need to save for the government loan, how am I going to repay this after the 5 years? The actual facts are you may not need to. So you have a couple of different options. Of course, one, you could repay the government loan, but secondly, you could potentially remortgage on your property. After 5 years, your property is likely to have gone up in value, so you may even have enough borrowing room to borrow enough on your mortgage to repay the loan in full and just add that to your mortgage. Perhaps your earnings will go up in that period, and obviously your mortgage debt is going to reduce slightly, so that extra capacity may be enough to repay the loan in full in some cases, because a lot of people will progress quite significantly in their careers over a 5 year period, so you may earn enough money to repay that in full. You've got to remember as well, mortgage borrowing is typically 4.5 to 5 times your salary. So if you're earning, say, another £10,000 additional income a year within a 5 year period, then you may have enough to repay it in full. I'm doing this based on like a 200 grand house, but hopefully you get my gist. Another option, of course, is to sell the property. So if you get to the end of the 5 years and you think, right, it's now time to get a bigger property, you can actually just sell that property on the open market and then repay the loan, at which point you complete on your new house and the solicitor will deal with it all for you. So you don't necessarily have to repay the loan, and that's where a lot of people potentially get a little bit confused, because I've had a lot of people say to me, Hazel, how are you going to repay that loan? What are you going to do after the 5 years? And I say, well, actually, if I don't repay the loan, I'll just move, because in 5 years time I'm going to definitely want a bigger house. So I try and look at it that way as well, that in a 5 year time frame it's very likely you will move. Especially if you're a first time buyer and someone young and you've only bought a 1-bed apartment, it's likely you're going to need a bigger property in 5 years due to life changes. You may have a baby, things like that. So that's another consideration to have. And another massive positive is the fact that you have a 75% loan to value. So when you are purchasing the property, your mortgage is actually only 75% of the value of the property, which gives you access to really preferential interest rates, meaning the interest you repay on your mortgage debt is going to be far less than if you were to, say, put 10% down on a property and get a 90% loan to value. So it makes your monthly repayments on your mortgage a lot cheaper. If you wanted to do a cost comparison, just go online and look at mortgage calculators and compare the difference between a 1.5% interest rate, which is what I'm currently on, versus, say, a 2.5%, and you'll see the difference. There is a much greater difference as well. Now I'm going to get on to the things which typically may be deemed as cons. Some of them I'm happy to just accept, to be honest, but some people would see these all as factors as to why you should steer clear of the Help to Buy equity loan. So each to their own, but I'll run through them now. So the first con is that the amount you owe the government is actually 20% of the property value. So if the property goes up in value, which it's likely to over a couple of years, then the amount you owe the government will also go up. So I've done a little example for you. So let's say the £200,000 property you bought is worth £220,000 by the time you sell the property. This means you now owe the government 20% of £220,000, which is actually £44,000. So you do owe them an extra £4,000 in addition to the original 40 grand, which does seem like a lot, and I can see why people don't like this, but the way I see it is you borrowed free money for a 5 year period. The first 5 years of the Help to Buy equity loan, you don't have to pay any interest. I think I forgot to say that as a pro, but the first 5 years there's no interest to pay. So I don't necessarily see it as a con, because it's effectively giving someone a little something for lending you free money over that period of time, and nothing in life comes free. So although I wish I didn't have to do that, I am happy to give the government the extra 20% in the growth, because ultimately I never would have gotten the property ladder without them, and I wouldn't have benefited from the 80% of any other growth, if that makes sense, without them. So I don't see that as a massive con, but some people out there would find that bad enough to put them off using the scheme. And another big factor is that you cannot let the property until the loan is repaid in full. So again, this is something that I'm experiencing right now. So as you guys know, I have a boyfriend who has his own house, and then I also have my apartment, and we would absolutely love to rent out my property and obviously live together at his, but unfortunately I have the government loan outstanding on my house, so I'm not allowed to let out that property until the government loan is repaid in full. And another point is that you can't Part X a Help to Buy equity loan property into a new house as well. So if you guys are familiar with new build houses, you can Part X a house and then buy another new build, and it's basically where the developer that you're buying from buys your house off you for a fair market value, although it's not really that fair. They often undercut you massively, just for ease, so that you haven't got to be in a massive chain. But with the Help to Buy equity loan outstanding, you can't do this. I don't necessarily see this as a massive con again, because when selling a house, especially if you have the Help to Buy equity loan, you want to get as much as you possibly can for the property when selling it. So selling it on the open market, yes, it may take a bit longer to find a buyer, you may be in a chain, but you're going to get more for the property than you would if you were to part X your house with another new build developer. So again, I don't necessarily see that as a massive con, but some people may. Okay, so another con is the interest that you have to pay after 5 years. So the first 5 years of your Help to Buy equity loan is interest free, which is great, but when you go into year 6, there is a 1.75% interest charge, which then increases in line with the RPI index plus 1% per annum. First couple of years, this may not be that significant. You may be paying around £60, something like that, a month. Again, it totally depends on the value of your house, but I'm just giving you a rough figure here for an example. But it's not going to be hundreds and hundreds of pounds. But as the years go by, this is obviously going to keep increasing and increasing and increasing until you repay the loan. So if you are planning on living in that house and not selling it, then you really do need to have a plan in place as to how you're going to repay the loan. Otherwise, this charge is going to keep going up and up and up, and the amount you owe the government, of course, is going to keep going up and up and up in line with the property value. So this can get you into quite a difficult position, and is one that I would be worried about if I was to stay in my house and I had no provision to move or had any savings to repay the loan. Okay, so when repaying the government loan, you can actually staircase this and make overpayments, which is great, but you are limited to 10% as a minimum, up to 20% of the property value, which effectively means if you bought the house for 200 grand, like we used earlier as an example, and you had a 40 grand loan, you can either repay the loan in 2 20 grand lump sums or the full 40,000, which, let's be real here, most of us don't have that sort of money laying around. So it's quite frustrating, because it would be great if you could repay it in smaller chunks, just so that you can reduce the equity the government has in the property quicker, but that's not an option. And let me get on to the costs when repaying the government loan. So I have looked into this recently, because as I said, this is something that I am considering doing at some point in the near future, hopefully. And as I've said, you can repay it with a combination of increasing your mortgage and also cash. So that's the combination that I'm going to be looking into. And when repaying the government loan or staircasing and paying a part of it off, you have to obtain a RICS regulated valuation on the property. This can vary anywhere between £200 up to, say, £600. I have found one for around the £300 mark, but this is someone that has to be on the RICS register to obtain a valuation on the current price of the property. You then have to appoint a solicitor who will deal with all the legal side of things, and I've obtained a quote for this, which is £495. And then you also have to pay a £200 administration charge to the government's administrators who handle this, which is currently Target for me. And that's quite a lot of money. That's in excess of £1,000 before you even pay any of the government loan off. And at that point, you'll find out if you owe them any extra money or not. So you obtain the valuation, you send it to Target with the £200 administration fee, and they tell you what you owe the government. So it's not ideal in this situation that you have to pay extra fees to just repay a loan. It's quite frustrating, and it is quite a big con that I didn't consider when buying my house. And then another small con is that there is a £1 management fee, which actually starts when you first buy the property. So I have been paying £1 every single month since I first got the property, and this is just to keep the direct debit running, I guess, with Target until the 6th year, at which point they obviously start taking the fee if you haven't repaid them, which is quite silly in my opinion. £12 a year for what exactly? But it's not the end of the world, it's not a huge amount of money. And then another main thing which has been in the press lately, which I may be doing a separate video on, is about the fact that it's a new build. So when you use the Help to Buy equity loan, it does have to be a new build property. And obviously new builds are overpriced, so some people fear that you're going to be in negative equity for a really long period of time, and that's obviously a little bit of a worry to some people, especially when you're only putting 5% down on the house. What if the property dips by more than 5% and you have negative equity? My response to that, I guess, is that the property market is constantly changing. When you buy a new build, of course you're going to lose money on it initially, because let's say you're buying off a really big development and they have obviously your house, you buy it, your house is no longer a new build because you live in it, and they've got the same house up which is brand new, no one's lived in it before, you're not going to get the same price as that house, are you? Because someone wants the brand new shiny house, which is understandable. But give it a couple of years and you will see an increase in your house. I have been keeping track of the value of my house, and the first 18 months it dipped at some stages by quite a lot, and I was a little bit scared, but it's actually in the positive equity now. So, and there's properties around me which are being sold for more than what I paid for mine. They've actually made money, so I wouldn't worry too much about this. Obviously I can't give you an answer too much because the market is constantly changing. We're not in the best market at the moment for house sales, but ultimately when you buy a house, especially when you're using a Help to Buy equity loan, you probably won't be moving within a year, so I wouldn't worry too much. As long as you ride it out for a couple of years, I'd like to think that you will be in positive equity. And then the last thing I wanted to talk about is just how long the scheme is running till, because a lot of people have messaged me saying the scheme is running out soon, it's stopping, what is happening? So I have done a little bit of research today, and the scheme is running until March 2021, and this scheme available currently is for anyone, so it doesn't have to be a first-time buyer for this current scheme. As long as it's the only house you're buying and you don't own a house currently, then anyone could do the scheme. So for example, I can use a Help to Buy again. If I was to sell my house now and buy another house, I can use a Help to Buy again on my second property, but not owning two properties, but the second house I buy, if that makes sense. But the new scheme, which starts in April 2021, runs until March 2023, and it's for first time buyers only. So my response to that is, I wouldn't worry too much about how long the scheme is running for, because schemes are always being changed, adapted, and then new schemes added. The fact they've stopped this scheme, well, stopping it next year, and then they're starting a new scheme for another 2 years, indicates to me there will probably be another scheme after that. So I wouldn't let this pressure you and feel like you've got to rush and get a property really, really quickly because the scheme's running out. But equally, you never know what's going to happen, do you? You don't know what the government are going to decide. So I think that's everything. Let me just have a quick read through my notes to make sure I've not missed anything that I wanted to tell you. Yeah, that is everything I've got. So is there anything that you guys think I've missed off, or anything about the Help to Buy equity loan that is helpful or helped you, or any tips you have about it? If there is anything, please do leave it in the comments down below, because I would love to read it. Let's build a little community. I mean, we do already have a community here, but it's really nice to help support each other, provide each other with extra information, and just help each other grow and build each other up. I think that's what it's all about. This is what my channel is about, helping each other and just to make yourself a better you and to make yourself in a better financial position. So I really, really hope you found this video helpful, any of you that are out there looking into this scheme, and hopefully it may have helped you make a decision if it's right for you. I mean, to round it up, my personal thoughts are, after doing the scheme and being in the scheme for around 18 months, is that I am really happy I did the scheme. Without it, I would not have gotten the property ladder. By now, I may have had enough money to put down enough to not use a scheme, if that makes sense, but properties have gone up in that time slightly, and yeah, I'm happy with it. I don't mind paying the government back a little bit more and them keeping some of the growth. Obviously I would love it if they didn't keep the growth, and as I said, I'm making provision now to make steps so that I can repay the government loan, fingers crossed, so that I don't incur any of the stupid interest penalties, and put myself in a position where I can hopefully let out that property once the government loan is repaid, which is going to be amazing. So it's actually a great way to get yourself on the ladder quickly, put yourself in a position where you're paying a relatively low mortgage payment as well, which is great because you're only paying a mortgage payment on 75% of the value, which also decreases your mortgage cost, meaning the mortgage you're paying is going to be so much less than if you were to say have a 90% loan to value mortgage. Therefore I can save more money each month. The money I'm saving I can use to repay the loan. So it's all swings and roundabouts. It's all, you know, there's pros, there's cons for everything, but I personally don't mind that I did it at all, and I'm happy that I did it, to be honest. But everyone has their own opinion, so don't let my opinion and what I've done sway you at all. We're all different at the end of the day, and what is right for me may not be right for you, and what's right for you may not be right for me. So anyway, let's stop waffling now, let's wrap up the video, and I really hope you guys enjoyed. I'll see you in the next one. Bye.